Right, before we jump into this video, just another reminder, if any of you are looking for a mortgage anywhere in the UK, doesn't matter where the property is, check out the good people at Mortigo. One of my good friends from a young age is actually one of the founders of the company, and I've used the company. It's not just because he's a friend of mine why I promote it on this channel. It's a very good company. I've used their services, and oh man, the deal they got me was amazing. So trust me, I'm not the kind of person who's going to come on here, tell you to use these people and they're no good, because you're only going to come back to me with it. So trust me when I say, if you need any mortgage related services, check out the good people at Mortigo. But yes, onto the stock I want to talk with you about today, and they are called Preferred Apartment Communities, stock ticker APTS. If you've been following this channel for some time, one type of stock you should know I passionately love is REITs, real estate investment trusts. You usually get a higher dividend yield than compared to other dividend stocks, and I love real estate. One aspect is of owning real estate stock rather than real estate is you get no problems. No fussy tenants, do you know what I mean? You're not responsible for no repairs, none of that nonsense. But with a REIT, you're getting all the benefits like you own a property, but none of the strings. So that's why they're a preferred favorite for me. Take a very quick look at the chart. You could see that they've had very good growth this year. They was as low as $5.26. Currently today, trading at $12.33. So, that's very impressive. If we set it for 5 years, you could see due to the old Rona-ronies, they did have a big drop in February 2020. And now it does look like, they're back on the right path, going upwards. Not to say it's going to be a straight line and they're going to jump back to previous highs of $21.34, because that was back in December 17. It weren't even Ronies that made that drop. So, I don't like to give price predictions here. And I always say it, and I'll say it again, not only am I not a financial advisor, I'm not your financial advisor. So always do your due diligence. My purpose here is just to tell you this is maybe a stock you want to look at. Put it on your wish list at the most. Don't just be like, you mentioned this stock and go and buy it. Do your due diligence. Right, Preferred Apartment Communities has a small market cap of 646 million. They're not showing a PE ratio at the minute, which we will come back to. They have a dividend yield of 5.66%, which is really good. And they went ex-dividend on the 14th of September. Right, and looking in Dividend Max, this is a part of my process, which I always do. I like to see how much I'm going to get paid exactly per share. So you can see here, the ex-dividend date here is 14th of September, and they're going to pay you on the 15th of October. Now, that's the day they're going to pay your broker. Your broker will then, God knows what they're doing, but they take their sweet time and then they pay you. But they get paid on the 15th of October. And for every share you own, you will get 17.5 cents. So I like to make sure I get a minimum of £10 per payment. So over the year, £40 just off dividends. So currently, for me to get £10 per payment, I would need to own 75 shares, because to $13 is roughly £10 right now. So I'd need to own 75 shares to get £10 every quarter, £40 a year. Now, you could scale that up. So you might say to yourself, £10 ain't nothing. You more want £20. So then double it, get 150 shares or whatever it is. We all got different goals and different aims. So just scale it to what works for you. But I'm going to quickly check and see how much 75 shares cost. And at today's prices, 75 shares will cost me £678, which I think's all right, which is going to give me £40 a year. You may say that ain't nothing, like, oh, I'm going to put in £675, and you're telling me over a year I'm only going to get £40 back. Well, wrong, because that's not including share price appreciation. This is just the dividend, the little sweetener they're giving you for holding their shares. Hopefully share price is going to grow, so you're going to make money there, and you're going to make money off the dividend. And if you don't think that's much money, well, go and take £675 and put it in the bank and see what you get after a year. Yeah, then come back and tell me that ain't nothing. Right, with any company that you're interested in investing in, I always think it's a good idea to look at the management and do a bit of digging around. So you can see the board here, who they have. And the CEO is Joel T. Murphy. Now then what you could do is look for them on LinkedIn. So here he is. But in this situation, you don't have access to this profile. The profiles of members who are outside your network have limited visibility. To access more member profiles, continue to grow your network. Whatever. So yeah, I can't look at his profile, but you know, I do this a lot with companies I look into. I will go check out their background, see where they've come from. Is this the first time they've worked in this industry or what? Do you know what I mean? Do as little or as much due diligence as you want, but all I know is I work too hard for my money just to be chucking it around willy-nilly. So yeah, I look and see what they've been up to. Right, so who are Preferred Apartment Communities? Preferred Apartment Communities is a real estate investment trust engaged primarily in the ownership and operation of Class A multifamily properties, with select investments in grocery-anchored shopping centres. Preferred Apartment Communities' investment objective is to generate attractive, stable returns for stockholders by investing in income-producing properties and acquiring or originating multifamily real estate loans. As of June 30th, 2021, the company owned or was invested in 117 properties in 13 states, predominantly in the southeast region of the United States. So you can see that they have multifamily, office, retail, and investment properties. And you could see that they have a vast amount of properties in different sectors. And, you know, being a REIT, most of the money that they take in, they have to pass on to us as shareholders. And we're talking from hotels to Walmart to Publix, TK Maxx, Kroger, Harris Teeter, Fresh Markets. From the Publix and the grocers alone, they must be making a killing. I don't know about Kroger myself, but my girlfriend, she's been to America loads of times with work, and yeah, she was telling me Kroger's everywhere. She was actually there for a shooting that happened in a car park in the Atlanta, or one in Atlanta, but you know, that's a whole nother story. One thing I like to see as well, it's not a deal breaker, but it's just nice to see that, you know, they have a little giving back scheme, what they're doing. During Mental Health Awareness Week, they welcome Java Joy as a group of special needs adults and kids who travel to serve not only coffee, but joy. Donations and proceeds are directed to creating new opportunities for people with special needs. We spent the month of October spreading awareness through themed initiatives and providing associates with mammogram testing. They support the Atlanta Community Food Bank every year by hosting a company-wide food drive and participating in volunteer days at the food bank. I know it's little things, but you know what I mean? It's just nice to see it's not all just take. They're at least trying to do something. What I like about APTS at the moment is I think it's a value play, it's a dividend play, and it's also a turnaround play because this company was heavily hit by the pandemic. I imagine for a time, a lot of places, which, you know, they've given out leases on and whatnot, were closed. So maybe, I don't think they was being paid by some of these people, because when we dip into their financials, it's not all good, which is why I believe now everything's back open, it's going to be a turnaround play. So buying it for these prices would really be good value. When we look at the revenue from 2017 till now, it has actually gone up every year. Even trailing 12 months, we are currently at 482 million right now. But when we look at the operating income, you could see 2017, 59, 2018, 70, 2019, 100, and then bang, when the Rona hit, minus 80. So, you know, they took a beating. So, yeah, But the trailing 12 months, we're back in the positive and it's at 101. So this is what I'm saying. It could very well be a turnaround play. Their total assets have been going up since 2017, which is good because bottom line is more assets is going to create more income. I do like to see total current liabilities drop in. That's not happened, but that is definitely not a deal breaker. Looking at cash flow and the net income, like we said before, due to Rona, it definitely dropped, but we are back in the positive now. This really could be a good turnaround play, but not a financial advisor. Do more due diligence yourself. I'm just pointing out a few key facts here. But what I do like to see, what's very important, free cash flow. They are in the positive. They've got some free cash, what they could then spend, pay off a bit of debt, maybe take on another property. Who knows? But they've got the free cash there. Right, let's look at the major holders. Let's see who's holding these shares. Only 2.69% are held by insiders. I'm sure there's a rule with REITs where they're not allowed to hold too much of the shares. Because you could have a CEO leave and take half of the shares with him and really bring the company down. So that's not happening here. 50% of the shares are held by institutions. Depends which way you look at it, whether it's a good thing or a bad thing. Retail investors could definitely affect the share price here, but then equally, so could institutions. And let's see what institutional holders do hold it. Vanguard, they hold the most, followed by BlackRock and Invesco. And Vanguard hold their shares in the specialized real estate index fund. Right, so let's have a look on tip ranks. I do like to come on tip ranks and see what their analysts think of certain stocks. Only 3 analysts have looked at this stock, and they've given it a highest price target of $15 and on the low $13. It's $12.35 right now, so that pretty much looking like a win-win from their eyes. They don't see it going up too much over 12 months, but it depends what you're in these stocks for. Me, I'm here for the cash flow, that dividend coming in. Like I said, I try to get £10 at least from each stock, and if I got 5 of them, that's a quick £50 a month for absolutely nothing, and that's what I aim for. They've given it a smart score of 8 out of 10. When it's a straight 10, they're saying to themselves, no doubt we think this stock's going to outperform the S&P 500. And if I'm right, the S&P 500 grows, I think it's 8 to 10% a year. So they're saying they believe it can outperform that. Ideally, if it was a 10, it's an 8. They also say it's a strong buy. That's the general consensus. The sentiment's very positive. Bloggers' opinions neutral. The news sentiment is bullish. I've looked, and there is definitely more good news and a more upside than there is down. I've briefly explained the technicals. This stock took a serious beating because of the Rona, but like I said, this could be a good turnaround play. And if I'm not mistaken, earnings for this stock is, where is it? Earnings date, 8th of November to 12th of November. So it depends what you like to do, whether you like to wait till after earnings before buying in, but that means there could be a price hike and now you've got to pay more for it. Or you might want to take that risk and get in now before earnings, and if it goes up, then you've profited. But like I always say, not a financial advisor. I'm just showing you the stocks I'm looking at the moment, and this is one I've definitely got my eye on. And I'm thinking of making that leap, to be fair. It's up my street. I love REITs. I like properties. If I had it my way, I'd be a property developer and making big money like that, but that's not optional right now. So I still like to make money off property, but in the stock market. But do what works for you. Right, that's the end of this one. Hope you enjoyed it. And if you're here from the start, thanks for your time. Much appreciated. I would be much appreciated if you could hit the like button and also subscribe if you haven't subscribed already. Share the video with a friend who might be interested in stock market or REITs. Man, spread the word and stay tuned for the next one. I've got a few lined up. Got some special guests coming back to the channel, and some really interesting conversations to be had, including one of the more to go founders. So yeah, stay tuned for that. But until the next one, people, take care of yourself. Adios.